Meantime, the Aussie dollar is under pressure ahead of the release of the RBA minutes tomorrow. Joining us to discuss more in terms of the currency and commodity front, Stephen Dooley, Head of Research at Forex CT, and of course, our guest host today, Henry Jennings, Advisor at Cameron Stockbrokers. Look, Stephen, I might start with you firstly. Thanks very much for your time today. Let's talk about the Aussie dollar. I mean, how much are people looking towards tomorrow's minutes in terms of where they're trading the Aussie?
Yeah, well, tomorrow's minutes are going to be fairly vital because, look, we've been indicated from RBA Governor Glenn Stevens that they're looking to move to a more neutral stance, and certainly from our research, we believe that they probably need at least another 25 basis points worth of cuts to get them back to a neutral footing. But remember that we don't actually have a RBA meeting in January, so if the RBA doesn't decide to cut rates in December, then we'll be waiting until February. And the RBA's got always been fairly attack these things on the front foot. So we'll be looking at those minutes tomorrow really to give us an idea about whether we can expect a rate cut as soon as December.
What would be, I suppose, the major motivation behind another rate cut? Because once again, I suppose opinion is very much divided in the market at the moment between those suggesting we will see a cut and those suggesting they'll be on hold for a little while.
Well, look, I mean, it's a fairly automated process to a certain extent, the RBA's policy settings, and when we're getting to the lower end of the band, and certainly looking at some of the RBA's favoured measures, we'd be looking at inflation currently around about 2.3%. They need to get their settings back to neutral if they are at that level, because if we slip below that level, slip below 2%, then there's a real need to cut rates by an even greater margin. So I think what all they're trying to do really, they're not necessarily trying to overly stoke the economy, they're just trying to make sure that we've got the right settings for the inflation level we've currently got, and probably at the moment our view would be that 4.5 is just that little touch above where it needs to be.
Henry, could you see it happening? Could you see them pulling the trigger in December?
Yeah, definitely. I mean, I think the RBA has a history that they don't just do one rate rise or rate cut. It tends to be the start of something. And I think we're going to see another rate cut in December. A little bit of a Christmas present for the retailers and for households. And I think then they will be able to stay their hand. There's no meeting in January. So we'll wait and see what happens by February.
So a warranted move if they were to go in December?
I think so. I mean, it seems like the inflation genie's had the stopper put on the bottle for the time being. We're not seeing that great pressure coming through from this mining boom at the moment. Certainly not in the inflation. Obviously, employment is still hovering around that 5.2, 5.3%. And I think the RBA has a charter. It has three things to look at in terms of the inflation, the growth, and keeping the currency stable. And so if it satisfies all those, I can't see why rates won't come down again.
And would you expect to see that filter through in terms of some of the, I suppose, the market view on the retailers? Because the last cuts didn't do it. Well, there was no sustained, I suppose, strength for a lot of them.
No, I mean, it's still the retailers are under pressure. I mean, we've talked about retailers before on this show. But, Myers and David Jones and JB Hi-Fi have all done reasonably well in the last last month or so. And I think another rate cut will obviously enhance the appeal of them. But the retailers have got more problems than just that. I mean, the internet is still having a major drag on their business, and they have been very, very slow to embrace it, I think, in this country. Stephen,
where do you see, just getting back to the Aussie dollar for a moment, I mean, where do you see the short-term outlook in terms of the trading range? Interesting to note at the moment it's just fallen below that 103 US cent level. It's been sort of, I suppose, bouncing around it for the last couple of sessions. I mean, what's the outlook in your opinion?
Yeah, well, look, in the very short term, you're absolutely right. That 103 level to that 103.50 is pretty crucial, and looking a little bit higher than that, we've seen really strong resistance above 104. So generally, traders are looking to take short opportunities on the Aussie at the moment, especially going into the minutes tomorrow. So really, it's just a case of, as far as short-term traders are going, looking for that right opportunity to get short. So, we've said that, that move below 103 that we've kind of seen the market try and do today, but hasn't quite been able to do that. We'd be looking at that level pretty closely going into the European session tonight, because of course, once the initial excitement of that, risk-on trade from this morning sort of dissipates a little bit, then everyone in Europe and everyone in the US are going to be looking to be short the Aussie dollar for tomorrow's RBA minutes. So we'd expect to see a little bit of selling pressure over the next 24 hours going into those RBA minutes.
Stephen, where would you see the euro then? I mean, if we do see, and you'd have to, as you rightly say, assume you'd need to see some sort of fading in terms of the enthusiasm, excitement from what we saw over the weekend. Where does that leave the euro? It's been a fascinating currency to watch and surprising many by its resilience and strength.
Well, absolutely, and I mean, over the very long term, say 2, 3, 4 years, we're fairly still bullish on the euro. We think that slowly, it's a long-term process, but we think that the EU is probably going to emerge from this crisis, stronger than ever. I think it's gradually going to result in, a very, very much more integration, both fiscally and politically. So that's our long-term view on the euro. The euro's strength really has been, over the last 2 weeks, a case of that it's such a major tradable instrument at the moment. It's, it's one day on, one day off, and I mean, it's trading, while it's, politically there's a new event every day, from a trading perspective, it's tending to respect pretty important levels. And that level that we're just hovering underneath at the moment, that 138.50, for the last 2 weeks, that's been a great selling opportunity. So, I think probably, most people are going to be getting into, certainly Europeans and Americans are going to be getting into their offices today, and they're going to be thinking, well, the euro's right at that important level, let's look to fade that, move higher that we've seen in Asia.
So, would you suggest shorter term then, the euro pretty ripe for shorters?
I think so, definitely. While it's under 138.50, it's an opportunity that's worth pursuing.
Do you think there'll be any longer term? How do you think the market is going to react to now the new Greek PM and the new Italian PM? And I mean, is that what the markets wanted to see? Will you see that shoring up some sort of confidence in the common currency?
Yeah, well, I mean, I think we've seen the market virtually almost react to that. We had a strong move higher on Friday night and a strong move higher first thing on the open this morning. And look, I think the market's pretty comfortable with it. Both the two new personalities we have, the head of Greece and the head of Italy. I mean, Papademos is, formerly vice president of the ECB. He's an EU man. Mario Monti was, he's been part of Europe since 1994 when he was the European Commissioner for Financial Markets, and so I mean both of those people are very closely wed to the EU project, and I think the EU and certainly most observers are going to be thinking, isn't it great that we've got a couple of company men, for want of a better word, a couple of company men in the right positions in those two jurisdictions.
Henry, it must be intriguing for people maybe not following the currency moves on a day to understand how the euro can sort of be holding up to us and just see a little bit of strength when you consider everything surrounding it is in such turmoil.
It is. I mean, for us poor humble equity people, it is a bit of a mystery to say the least. I mean, we've certainly seen the rise of the technocrat, as we were talking about earlier. I'm not sure how the Greek and the Italian people are going to feel about someone being parachuted into their voted position, as happened here to some extent with Julia and Kevin. So, but poor old equity traders like me, it's just a great spectator sport, seeing the muddling and dithering of Europe continue, as it will forever.
It seems that way, isn't it? Look, we're going to leave it there. Stephen Dooley, always a pleasure having you on this show. Once again, thanks very much for your time. Now, Australians may not be building, but they are painting. That is the view of Dulux, which is posted a 13